Hello, ladies and gentlemen, and welcome back to the newest edition of Levalytics on Video. I am your host, Jordan, and if for those of you who do not know me by Jordan, I also go by Permable Nino in the Twitter sphere. Welcome back, guys. Welcome back to another week of crypto markets, all the craziness, all the action that's been going on. First of all, I want to apologize to people that I didn't put out a video at the end of last week. I'm kind of just still going through this rebuild phase with the data. For a little bit of an update on that, I think I told you guys that I'm starting to wind down the costs of this production. It's just, like I said in the last video, it's been just costing me way too much money to keep this thing going. And I want to continue doing the channel. I want to continue doing the articles. But given with that in mind, I need to set it up in a way where it's cost effective. It's just been costing me way too much money to do this. This is a very expensive hobby. So I'm still going through the process of cleaning things up. For a little bit of context, I used to have a big database that stored all of my data so I could run through lots and lots of data across the entire crypto market. For example, I was pulling data from across over 600 perpetual swap pairs on Bybit, and it used to take me 3 hours to print all the charts that go onto dudeterminal.com. Now it's taking me I'm printing half as many charts with half as many rows, and it's taking me like 15 hours for a little bit of context. So things have slowed down a lot. So what I'm trying to do is get things back up to speed, and maybe charts are not getting built as speedily, but it'll end up having the full data set. But it's taking me a little bit of time to fix the underlying code that helps generate this stuff. So that's what's been going on. That's why I've been a little MIA. That's why I've not been posting as much. And so that's what's been going on in the background. Otherwise, guys, we can really just get into the market and start talking about what's been going on in crypto. I'm really excited about the way I played the market topping here. I think I told you guys about this when Bitcoin started printing red candles. I got out of Bitcoin, and then I got out of all of my other favorite trading pairs at the time that had outperformed while Bitcoin was kind of just floundering around here, right? Like Hype went for it, Near went for it, Zcash went for it. I sold all those positions. What ended up happening though in the meantime is the market dumped. I was really excited about it. There was a big deleveraging event, which I can talk about a little bit down here, right? This was the value zone down around 60K, which was the previous low. And I was really excited to get back in the market. And one thing I did after the market dumped and everything got delevered, I went to Hype, right? And on this blue candle, I bought back in with 50% of my cash. So I was really excited, and I was thinking, the market's going to run off, and this will be one of those dips that people are looking back on with Hype, and they would, start hitting themselves because they were disappointed that they didn't buy the dip. So I did that, right? But then the market went against me. So after this candle, this red candle, I ended up closing out the position, and unfortunately I lost. I think I gave back, ended up giving, how much was this down? 10%. So 10% on 50% of the book is down another 5%. So I ended up giving back an extra 5%. That's a meaty day of giving back your gains pretty quickly. And that's one thing I've learned through trading, is that moving slower and sizing less saves you a lot of trouble, because the speed with which you lose money is way faster than the speed with which you make it on average, right? So, after considering how well I played everything, I was really excited about it. I was only down like 24% from inception. BTC was down like almost 50% at the time. And then I gave back another 5%. Now I think it's down to, hold on 1 second. Let's go to Dude Terminal really quick. The number is at minus 29% for the Levalytics portfolio, and BTC is down 45%. So, that was a mistake I made in the meantime. I feel like I just wanted to kick things off by starting you guys off with that even if you do play it right at the beginning, being too excited to jump back in the market, you can make some really dumb mistakes, especially if you're sizing too big and moving too quickly. And the speed with which you lose money can happen way faster with the speed with which you make it. And that's a lesson learned. Maybe some of you guys already know this, but that's an issue that I sometimes have myself, where I was like, the market's going to run off. I want to make sure that I'm in the mix, and that I have my good position. That way I can start to outperform, right? But the problem is that when you start going a little bit too crazy on the sizing and you put too much of the book into one position, especially into something that's not BTC, Hype is, despite how well it's traded, it's moving into a period of higher volatility. So that I just need to make sure that when I'm getting excited about positions, the sizing is correct, or I'm moving at the correct pace, right? So that way I don't lose big chunks in a day, right? Like losing 5% in a day, that pisses me off. That's too much, right? So that was a mistake I made after everything that had occurred, despite the fact that I feel like I'd played everything pretty well. But otherwise, let's talk about the BTC chart really quick, though. So I don't know if you guys have noticed. I have a little gadget added onto the chart that shows big dips, and the way these big dips are calculated is just like the high intensity of losses. The way I do this is I calculate losses over various time frames to see if things are oversold or not, right? So you'll get these triangle print dips, right, on the chart where you have high intensity losses over multiple time frames, basically, right? So one thing I do like as like a way to get excited about the market and to try to rebuy the dip, right, on this dump, there was a lot of signals, right? You didn't get a daily time frame dip signal. However, if you go to the 4 hour time frame, keep in mind I have this for various time frames. You got three different dip signals as the price plunged into 60K. So I did really like this as an opportunity to buy the dip. And I think I put 30%, after I got that hype trade wrong, I put 30% of the book back into Bitcoin because I was like, okay, there's a lot of signals across the board that this was oversold. And that's kind of what I talked about in the last video. I was like, in the last video, I basically hit on the idea that this was like a capitulatory type move. There was a lot of deleveraging, signs of bad returns, oversold RSIs, a bunch of different signals that you want to see. Especially, right, most importantly, if you're starting to get like all these capitulatory signals and it's going into support, right, that's exactly what you want to see. And that's a good opportunity to buy the dip. So I was like, okay, once I got hype wrong, I wanted to make sure that because basically, despite the fact that I got the hype position wrong, I still held the conviction that the price was going to bounce from here, that we were going to get a bounce, and this was most likely a capitulatory bottom, in that there's a decent opportunity or chance that 60K was the line in the sand, and that we're going to have maybe some ranging throughout the summer. I think I tweeted about this. That my expectation is that you probably get sideways BTC price action for probably the next couple months throughout the summer while people go party and do whatever for the entire summer. They check out. Nobody's trying to make a home run BTC bet after the price has been down 50% over the past year, over the summer. People are like, no, I'm not going to get fired over a trade I took over the summer. So that's my expectation. I think it's going to be boring. However, I think, in my opinion, the good news is that I don't think the bleed out is going to continue, and that there was a lot of signs of panic on this move down. And like I said, go watch the previous video if you want a little bit more context there. But otherwise, if you really point out, you want to look at the chart, right? The big level is basically this is 82 to 85K level, right? You can see it. Hold on one second. Let's just do a horizontal ray. Boom, right? That's 84. And then, hold on one second, got this. Just put it right there. Yeah, so like between 81K to 85K, basically. This is just like the line in the sand. This is where we had trouble getting it going last time. And yeah, that's kind of my expectation, that, a boring sideways summer. However, let's look at some charts really quick. Like I said about hype, this is printing red, right? Right now it's negative momentum. There's been a lot of consolidation here, right? Between hold on one second, $55 and $75 for hype. So, my system, like I've told you guys before, my trading system is designed not to hold consolidation. It's designed to buy breakouts, or sell breakdowns or sell sideways. That way you don't get caught in the mix. Like I said, I've said this before in multiple videos. If you hold sideways in crypto, it'll drive you nuts. It'll either shake you out before the price goes up, or it'll drive you nuts, then rug you, right? So I just kind of try to avoid doing that with actively managed money, right? Keep in mind, if you're a hype bull and you're like, I just want to hold it, the chart looks good. It's pretty much up and to the right for the most part, right? And it's breaking to new highs, right? It broke to a new all-time high here. So I kind of retested that level, right around 57. So this is a pretty bullish retest, right? So you get a break to new highs. This seems like an easy buy, and you'll get a blueprint, blue candle print on my momentum system. So, there were signals though, that there was a top going in to the market, right? There was multiple bull top signals right here. But if we print new highs, I think it's off to the races. And I think there's been plenty of blood out in the streets. There's been a lot of deleveraging. For example, let's talk about Zcash. And I've talked about this before, that, Zcash dumped from It dumped from $617 down to $250, right? this is not dead yet. I mean, look at this. I mean, it's kind of looking like a bearish retest around this $520 level for Zcash. But if you go over to, hold on one second, let's go down to the Zcash BTC chart, because this does not look bad. This is Zcash versus Bitcoin. I mean, this is like, this held sideways, right? This is just trading in a range right now. I mean, it's hard to be bearish looking at this thing. It's about to have a blue daily close. So bullish momentum possibly on the Zcash BTC chart. And I've talked to you guys about this before. Some of these assets, once they kind of capture a certain level of attention, it's hard for that attention to go away until it just something really pops. And for Zcash, there's just a lot of people beating the drum for Zcash, that it makes me think that this thing is going to go higher. And I've told you guys before, not a big particularly like obsessed with Zcash. I know there's a lot of people that love it. This auditability news about the supply and possibly having an inflation bug, not surprising. That's something people have always known, which kind of made me think also that this whole panic dump over it was, just bullshit. It was just like an excuse to shake people out, because anyone who's been around the block a few times in crypto knows that this has always been a concern for Zcash. And I'm pretty sure this is not the first bug that Zcash has had either, right? And like we talked about on this channel too. I love that there's a narrative. I love that there's a story. I love that there's all these things going with it. You don't have to buy into it, right? But the fact that people that create lore around some of these projects, especially one that doesn't generate cash flows like Zcash, right? It's just trying to be private money. So there's plenty of reason for me to believe that I think this is just going to end up breaking higher, right? Like, I think if you really even want to play it safe, just wait till it breaks above to new highs. I think that's probably what I will do. That's probably what I'll do with the Levalytics money as well. But yeah, there's some good signals for some of these assets. Hold on. Let's go to Near really quick, because Near is another one that I was holding, one that I was excited about. But I mean, look, Near versus BTC. I mean, this looks good. You would never, I guess maybe you would know that there was some sort of huge shakeout event by this down candle, right? But this does not look particularly bad. If this breaks to new highs, I would probably just rebuy it again. So there's a lot of encouraging signs. And I still think, and if I'm going to be completely honest, I think we are possibly entering into a new, bullish era for crypto, and I think it'll be better defined by quality projects leading the way. Maybe there will be some shit coins pumping along the way, but I do think we're kind of entering into what I believe is like a K-shaped crypto economy, and it's kind of been the case for a while now. I'll show you guys a chart here that I wanted to share with you related to this. Hold on. Okay, so this shows the gap in performance between the top 10 best performing coins and the bottom 10% performers, right? So the best performers minus the worst performers, right? So if the line is going up and to the right, that means over time, the best performers are running away from the worst performers. And that's exactly what we've had, right? This has basically been the theme since 2024, basically. And it's accelerating at this point. So we are entering what is known as a K-shaped crypto economy. And by that, I mean the best assets are going to continuously perform better while the worst ones die out and they continue to perform worse and worse. And the reality is, I think some of this money from the bad ones is probably going into the good ones. And I think that's a great signal. It also makes things easier. I think I've talked about this in other videos as well, is that if there's not that many assets to pick from, it makes it way easier to trade. That's why, if I'm not going to fade this, but people are like, oh, it's a crowded trade. Near's a crowded trade, Hype's a crowded trade, Lit's a crowded trade. All these assets are a crowded trade because everyone's talking about them. It's like, no, it's probably a great thing that these are crowded trades, because there's not that many great trades to take in crypto. So if you see a good project and it's starting to, for me, I see a good project, good narrative, and I start to see blue candles on the asset versus BTC and asset versus USD chart. Near USD is still printing red candles, but when you start getting blue candles, plus like I see something like it's a profitable protocol, it's making a bunch of money, making money hand over fist, people are using it, people are talking about it, people are excited about it, there's smart people shilling it, and you're getting good price action. I just think that there's only so many assets that you can buy in this space. Like I can't say that enough, but I think we are turning over a new leaf in crypto. You can kind of feel it. So I'm feeling optimistic about the space. I think you just kind of need to pick your spots, and you need to pick good projects. I think the age of everything going up together is possibly over, or it's just not even worth it. And when I say it's not even worth it, I think that you're going to be able to own good projects with good price action, right? With momentum that will outtrade some of the dog shit that you used to buy back in the day. And the reason why you'd buy the dog shit back in the day, because for a long time, all the garbage in crypto used to outperform the good stuff. So we're at a point now where I think the tables are kind of turning a little bit, and I think there's an opportunity to start buying some good stuff. Crypto's also at the intersection of all this AI stuff that's been going on. People talking about Anthropic getting some of their new models getting shut down by the government. So people are talking about moving towards open source models. I don't know the validity or how difficult that's going to be over time, how performant the open source models are going to be, but I think there's a lot of potential in crypto to be at the cross section of a lot of different things going on. And I think you start to get into a situation, like I said, where you're in a crypto space where the best stuff is continuously outperforming the bad stuff, and it'll become obvious, more and more obvious over time. You can see that this trend is accelerating, right? This looks like this has legs, and I think that'll bring more and more people in. People start to see, especially from the data perspective, that the good stuff is actually outperforming the bad stuff, or that at a minimum we're entering in a space where there's some sort of discernment going on, right? Where you're getting wider and wider gaps in the best performing assets versus the crappy ones. I think that's a good signal. I think that'll bring more people in over time. So there's a lot to hang on to there. So yeah, I buy these type of projects, right? I think there's no reason to be a contrarian here. There are certain points in time where I think it's the good time to be a contrarian. For example, when the market is just way overbought, overextended, a contrarian move is just sell some, right? I think that's a great idea. But in this situation where we're kind of coming out of the depths of a bear, we had a big capitulation event with BTC, right? People got delevered, people freaked out, people thought Saylor was going to puke his bags. There was just no follow through on that, right? And you're starting to see Bitcoin's trading in a range. You might get some lower volatility for the summer. You have some assets that are starting to outperform, and you have all these better assets outperforming the worse assets by a lot, and that lead is starting to extend more and more. There will be rotation of dead capital. So there's just a lot of different things going on where you can get concentrated big moves from some of these better assets. And the suits are here, and they're happy to buy the good stuff. They're not going to go and buy your crappy stuff. This is why BTC outperformed most alts for a long time, is that you had the suits buying BTC. At a minimum, you had Saylor buying BTC. And I think the fact that Saylor, there might be some signs of him maybe slowing down a little bit on his, escapade of just trying to accumulate every BTC under the sun, also is another reason why you could think that maybe altcoins could outperform BTC for a little bit, especially the good projects. And I think the fact that this sentiment, I'm giving you guys an opinion that I don't even think is controversial. I think it's starting to become more and more accepted among people in the crypto space that, we're kind of entering this new era, turning over a new leaf. Crypto's at the cross section of a lot of cool, interesting topics. I think people are going to wake up to this. The valuations in crypto maybe don't necessarily reflect that. I think there's going to be possibly an attitude where people are going to be in a position where they're going to be in a rush to try to accumulate the best stuff before it runs away, right? And that could be possibly what's going on. There's only so many places to park your money in crypto. We've all learned this the hard way. You can't just put your money anywhere, especially if you're managing a large bucket of money, which a lot of these big funds are doing. So there's just a lot of potential for upside. And I think I trust all these like strong charts, right? Like, for example, Lit is another chart that I still trust. I mean, this thing has just been continuously printing blue. There's the big pullback here on the big panic day, but we're almost back at the highs again. This thing prints new highs. I think it's off to the races, and it's still trading with a lot of volume on Bybit. Let's look at Coinbase really quick, because I think Coinbase is also trading a lot of volume on the spot pair as well. So yeah, there's just a lot of good going on here. So those are things to be excited about. And like I said, for the time being, the Levalytics book is only 30% BTC. The exchange that I trade on for the Levalytics book does not support lighter. So this would have been a chart I would have added. Otherwise, I'm just going to go through the hype train to get that done. I think hype is, prints new highs, or I just get another blueprint within this range. I'm happy to go for it. But yeah, so that's kind of where things stand. Otherwise, let's talk about open interest. I want to talk about open interest in the K-shaped economy. I actually was planning on talking about the K-shaped crypto economy later on, but I kind of already hit on that here. But yeah, let's talk about that, a little bit of leverage in the system, right? This chart, I've talked to you guys about this chart before. It shows you high values tell you that a lot of volume is staying within open interest. That means people are getting long and holding on to their long positions, or getting short and holding on to their short positions, right? Low values tell you that people are opening and then closing their position really quickly, right? That means there's a lot of volume relative to the amount that's actually sticking into open interest, right? And you get big breakouts possibly when you get high values, right? Where people are willing to hold on to their positioning. That's what the green dots here. Green dots signal to you that there's this is printing large values, and that there's a lot of people willing to hold on to their positioning, right? So this could either be shorts getting blown out, or longs just having a good time and just being like, forget it, I'm going to hold on. This either causes pumps, right, when people are willing to hold on to their positions, or it can cause tops, right, where the price reverts in a mean reverting environment. You get this multiple times in 2024. And we just had a pump, right, from some green candles, and then we had a deleveraging event on the other side of it. That was one thing. This chart is one thing that was on my mind, and I was concerned about once we got turned away at the 80K level. I was like, okay, well, people have been holding on to their positions. Like, what's going to happen? There's probably going to be some deleveraging event. And, we got, the value is trading at 0.45. Keep in mind, this is a Z-score. So high values, the high values print for the green dots when the Z-score is higher than 1.5. So the Z-score right now is 0.45. So it's not even negative. So, it was a deleveraging event. It was relatively tame, all things considered, unless there's more blood to come. You never know. But yeah, so, we're just kind of in recharge mode right now. And keep in mind, this takes into account altcoin open interest. This is not BTC open interest. So, yeah. And this is the 30-day Z-score for altcoin open interest, right? And the green dots show you when there's large deleveraging events, and then the red dots show you where a lot of people are starting to lever up, right? So these green dots, you'll get them right after the Trump goes into office in April 2025, Liberation Day, put in a bottom there. You got it in deleveraging event in October 2025. You got it Thanksgiving 2025, where we put in a temporary bottom around 85K, and then we got it in February 2026, which put in our bottom around 60K the first time. And then we got another one here, right, in June 2026. And keep in mind, this weird blue streak downwards, I think this is just a bad data print. I need to fix this. But otherwise, it did hit it, right? We got, this is because it's a Z-score, values that are -2 or lower will give you green dots, right? So we had a big oversold deleveraging event for open interest for perpetual swap traders. So this is great. Like I've told you before, some of these metrics, you have to ask yourself, when would be a good time to buy? And this tells you exactly when's a good time to buy, when there's a big deleveraging event. 30-day Z-score is like enough of a time, zoomed out time frame where you're like, okay, this is, it's focused, it's lower time frame at the same time as well, right? It's not too zoomed out. It's not like a 180-day or anything like that. But yeah, when you get large deleveraging event into support and the price does not just fall through, and there's actually like a little bit of a bounce going on right now for BTC/crypto, this is a good sign. That means that people are delevered, people panicked, people were forced out of their positions at the bottom, and most importantly, the guys who needed to get their position fills, and when I say position fills, I mean their buys filled, they probably got them filled down here. They probably had a good time, and they're feeling good about themselves. But yeah, so for the time being, you have some relatively low open interest for crypto. So this looks good as BTC sits around support around 65K, 66K. And it's actually bouncing off support at this point. I consider the support zone from 64K down to 60K. So we are out of support now. So we are bouncing. We're on the move. So yeah, this looks good. And then here is another chart that shows you the percentage of perpetual swap pairs with an unusual change in open interest. And when I say an unusual change in open interest, I mean upwards or downwards, either a very large up change or a very large down change in open interest. So the red dots will tell you either a large deleveraging event or an event where there's a lot of open interest wiped out. And yeah, this shows the percentage of pairs, right? This isn't the same thing as a Z-score. So you also got a large breadth of pairs, right? You had 30%, 25% of perpetual swap pairs on Bybit had unusually large changes in open interest, which I assume is downwards, right? If you look at the average open interest Z-score, right? There's decent chance that this is printing a lot of 25% of pairs had a large downshift in open interest. So people were wiped out in a lot of different assets here. Um, so yeah, this looks good. Like I said, once again, you really want to see deleveraging events occurring into support. And the problem is you want the panic to happen at the right time. I think I talked about this in the last video too. If you start getting, that's the beauty of this downwards only price action that we had here, right? Hold on one second. Let's zoom in. Right from end of May, it was basically just down only up until June 5th. Right, it was vicious, quick price action. This is how you get people to panic, and ideally, you want people to panic earlier rather than later. If you're a bull and you're like, oh, you want the price to bounce here, what you did not want, like I told you guys before in the last video, is that you don't want a slow bleed out. Right, if you got a slow bleed out down to 60K, then you'll get the rug. Right, then you get the rug down to 40K, like people were talking about. But if you get a down only line from May 31st to June 5th, from 74K down to sub 60K, that's how you shake people out. That's how you get liquidations. That's how you get forced hands to get out of their positioning, and that's how you put in a bottom without actually having to go much deeper and grab more liquidity, right? So this looks good to me, right? This is from a pure perps open interest perspective. You shook out a lot of people. You got the panic that you wanted to see, so this looks good. Let's see what else we got going here. Yeah, this is the K-shaped crypto economy, right? Like I said, we're still we're continuously moving into more and more of a space where the good stuff is rising to the top, or at a minimum, the top performers are starting to really run away from the bottom performers, the bottom feeders. And so you could end up in a space where you have a bunch of crypto people in a room where one guy is euphoric because he just got rich, and then you have one guy who is depressed because he's been holding on to the wrong garbage that's getting siphoned off and going into the good stuff. Just make sure you're not holding that crap. Hold the stuff that's actually moving. This is a good time to actually, one thing that's nice about bear markets too, it gives you an opportunity to kind of re-underwrite your investments, right? Be like, do I still believe in this? Is this something I actually still want to hold moving forward, right? So that's something you should keep in mind. I've made this mistake myself. I've bag held some garbage for way too long, and I have regrets about being like, oh, I should have just changed my mind earlier. But the best time to change your mind is when everything is depressed, where everything is down, right? So keep that in mind, and it's never too late to make the change. Okay, so this chart here shows you the percentage of assets on Coinbase that are down more than 90% since they got added to Coinbase, right? So we were sideways here around the 20% level from the beginning of February until now. And then on this big dump, we had even more pairs, move into sub 90%. So there are assets dying, more and more assets are dying. This line is up and to the right ever since September of 2025. Basically, ever since the large deleveraging event, October 10th, right here, which, only 8% of assets on October 10th were down more than 90% on Coinbase since they got added to Coinbase. Now it is at 26%. So it has been an absolute bloodbath ever since October of last year. I guess 9 months ago, 9 to 10 months ago. So yeah, this does not look good. And yeah, it's, it just goes to show you why everyone was so negative on Twitter though, because even more assets broke to new lows, right? Broke below 90% down over this period, right? If it was like just still here, people are like, oh, whatever, it's the same old shit, right? It's the same, oh, at least my coins are still trading in the same range. By the look of it, a lot more assets, this thing went from being in the 20% range to up to 25%. So that is a big pump. That's a large addition of new assets that are just bleeding out. And this thing seems to have no end, especially after this has been going sideways from February until, May or June, right? That's 4 months of sideways. So, you might get more extension to the upside of these assets continuing to underperform, especially if BTC flails around all summer. So we'll see. Like I said, you could still have this line continue to go up, and you could also still have assets like Near or Zcash or Hype or Lit. You could have those assets make new all-time highs. So they're not exclusive ideas anymore. We live in a new crypto world where I think this is a very real part of the game, where if you are holding garbage, you could be part of this 25% bunch that is just continuously bleeding out, and it'll keep you down more than 90%. And the problem is when you're holding these things that are down more than 90%, if you size it at all too high as a large percentage of your portfolio, this castrates you basically financially. So yeah, this is a good time to look through your portfolio and see what makes sense, because I really think that this is inning one of the new crypto era, where you're going to start really getting the K-shaped economy, where the good stuff is going to start ripping. And if it has a good narrative, it's making money, and the price chart looks strong, it's probably a good buy. And I think it's going to actually be really easy relative to other periods. I think crypto was really like an easy mode from 2016 to 2000, like up until 2017. And then no, maybe up 2007, maybe 2016 up until 2020, right? Because COVID, had all the stimmy checks, everything under the sun pumped as well. But after that period, it has been very difficult sledding, right? It has not been an easy space to trade or invest in because there's also just too many assets. Everything's spread out too wide. Now we're in a space where there's a lot of assets that exist, but I think people are being more discerning with their money. There's a lot of dead capital sitting in crap. So these assets that are bleeding out, they have a lot of people still who might want to sell their positions. So people are selling their positions into the other assets, and you're going to have an opportunity to ride those up. So yeah, like I said, I think it's like kind of inning one of this. And I think a lot of people coming out of, this drawdown that just occurred at the end of May, beginning of June, people might be licking their wounds a little bit. I've said that before. That was my whole thesis behind buying hype before I got steamrolled by betting too big on it. I still think that there's going to be some of these assets that just pump. And because people are still just kind of like licking their wounds, they're depressed about the space, they're checking out, they're quitting crypto, they might just run off. And I think people look back on this period 6 months from now and be like, wow, things are trading way more expensive than what they were before. But yeah, like I said, this chart is not exclusive from the good stuff making new all-time highs. But this would not surprise me if this chart just continues upwards. Every time the market has a large deleveraging event, more and more assets just bleed out. But something to watch moving forward. And you don't want to be holding this 25% of assets that is down more than 90%. So yeah. Okay, so this is the breadth chart. This takes the assets that have made new highs over the past 90 days and minus the assets that have made new lows over the past 90 days, right? If you have a value, this is 0 right here. Anything that's negative tells you that more coins have made new lows versus assets that have made new highs, right? So the breadth is minus 40% print. So right now it tells you that more assets are making new lows versus assets that are making new highs. So we had a brief period where, things looked pretty rosy and we were getting positive prints on the net breadth. But we got turned away. So this is when people got overheated in front of their heels, in front of their skis a little bit. Like I said, I was bullish too. Just because I'm a trend trader. So this was just a big period, was a big fake out. And that's just crypto for you. But looking back on it, this would have been a good chart for me to really reference. Be like, okay, the market's very levered up. We're at resistance. Boom. I make mistakes. And that's the beauty of like what I'm trying to do here with the channel and the research that I do, is that you can be wrong, but still be right. And by that, this is what I mean by that, is that you can make the analytical decision, be like, oh, there's positive momentum in the market. I think the price is going to go up. Even if we are at resistance and the market's super levered, I'm going to go for it. But the second your system tells you to get out, you start selling, right? And that's exactly what I did here. So you can avoid damage while also being wrong, right? It's the marriage of analysis and execution, which are two different things. But yeah, guys, I really think that we are in for a most likely quiet BTC summer. I'd be surprised if BTC broke above 80K before we get back in the fall. The World Cup is on. I think there's a lot of people just checked out. We came off a high volatility event. Usually after a high volatility event, you get a quiet period, right? So let's look at DVOL really quick. Hold on. And DVOL tracks the 30-day forward-looking volatility for BTC. And DVOL is just dead now, right? So this kind of tells you, in my opinion, if you look at this, like how much it's already died off, that people are not expecting further downside, if I was to guess, right? So, after that, like I said, there's a quiet period that occurs after these large deleveraging or high volatility events. And perfectly in time for summer, right? And summer tends to be a sleepy period. But, it could, like I said before, it could be one of those periods where people shove into these high performing altcoins. And yeah, so don't completely check out, pay attention, keep your wits about you. Like I said, the Levalytics book is only 30% long and it's fully sitting in BTC because I think this is a high confidence level that there's a lot of signs of capitulation. Like I said, if you want to go look at that in the metrics that I talked about, that was in the last video. And yeah, guys, otherwise keep your head on a swivel. And like I said, I'm going to continue doing the channel and the the articles. I didn't actually write an article. It's only a video for today. There's a decent chance, like I said before, that I'm only going to be doing one video slash article per week. But it really depends. Like I said, I'm just trying to really figure out this data stuff that's been going on with the channel, not with the channel, the data stuff the data changes that I'm trying to make now that I don't have a database before to store and host all my data. But yeah, guys, I'll keep you posted, and I really appreciate you guys tuning in. If any comments, questions, concerns, feel free to drop them below the video. Shoot me a message at PermabullNino on Twitter. And otherwise, guys, thanks for your attention, and have a great week. Thank you.